All right, team. Hey, Chuck with Traders War Room, and we are going to kick it off. Remember, I told you at the town hall, October was going to come in, and on Wednesdays, we were going to start with some live training. We'll get about a half an hour in for our live training. We're wanting to do this every week, and then on Fridays, we'll do an aftermarket kind of wrap up training. And then on Sundays, we're going to start doing a watch list building training. Today's training, though, is going to go ahead and we're going to cover how to build and use market scanners. All right. Because I think this is one of the very basic things that all traders and investors really need to understand, because we can look at 6,000 different stocks out there, right? And it doesn't even matter whether you're trading crypto, whether you're trading Forex, futures, stocks, options, all that stuff, right? But what we want to do is we want to try to bring it down from like 6,000 stocks and bring it down to like, a handful of things that are potentially in the realm and the zone of moving so that we can make some money. Because as traders compared to investors, we're looking for a stock or an option so that we can trade this in the idea of flipping it for cash, whether we're flipping it long for cash or the direction is short for cash. We're looking for a flip for generating income. With investing, we're looking more long term. Okay, we might buy, something on high because we want invested in that company. We like, Mountain Dew drinks, right? So we go ahead and invest in Pepsi, and Pepsi was on a tear, right? And it's extremely expensive. So we go ahead and we start nibbling in, and then it dumps a little bit and we buy some more and we fill out our position. Our idea is that over the years, our investment into the stock is going to pay off in either dividends or growth with the company over time. But trading is a little bit different, because trading, we have a shorter time frame mentality because we want our money to be working for us. And when we do this, we want good, solid things that are moving and shaking, specifically that are moving on volume and that are moving with price action. So we're going to talk about that real quick. Few notes, of course. You guys know we got the text message trade alerts platform. I'm not going to dive too much into this like I do on my other platforms, because this is more about training. But if you're interested in those, go to the website and check it out. Also on YouTube, you can look at our promo. It's about 51 seconds long. It has a real good idea of what the text message platform is about. Also, the Trading University. This is a good opportunity if you're interested in like curriculum like this, except more deep diving into strategy and the theory behind trading and investing to really build that. Check it out. It's also on the website. And then, of course, we got the one-on-one mentoring. And also, as a TWR market warrior, we're looking for the 2004 campaign. Okay, so if you get an idea what Traders War Room kind of means to you and moving into 2024, give us a shout out on one of our social media platforms or come into the chat group, because this right here is for premium members of TWR, right? We're not putting this on the general platforms and stuff like that. I'm recording it, of course, but it's private so that I can utilize it inside of the TWR premium members for those that are missing this. But definitely let us know in the chat group of some 2024 campaign slogans and ideas that you have, because we want to come out in 2024 swinging. So without further ado, let's go ahead and get into this real quick. We're going to come out. I see we got Sarah. Appreciate you.
Sala.
What's that? I'm sorry.
It's Sala, S-A-L-A-H.
Oh, I do apologize.
That's
I
okay.
apologize. All right, let me get this going. Why is this not doing this? Okay. And my desktop. Hello. And here we go. All right. Are you able to see the screen?
Yeah.
All right, awesome. Appreciate that. Okay. What we're gonna do is I'm using Webull right here. Any platform you have, even Robinhood now, okay, they have the screeners, and usually it's on the sidebar of the platform that you're using, and you can use the phone or the computer. Each one application has different things that you can use. A lot of times the computer has more access to the full spectrum of things that you can use for screeners and stuff, and the applications on the phone have a limited version, but either one of them is good. I'm going to use the computer just because it's ease of access, because I'm on the Zoom right now, but I also do screeners off my phone as well, specifically when I'm looking for something specific in the market. But we're going to look at just kind of a general idea of what we're looking for when we're building these. So anytime you go to the screener or scanner, you can use them simultaneously. I have a couple already that I built, and these are things that I go to every day. I come into and I look at these, and you have to use the screener on the day of the market. So if you're going to use it, you got to click it on it, and you have to use it when the market's open for the day for the screener. Otherwise, it's not going to work on like a different given day. So, if you're going to, pick a screener out like this one right here, this Big Boys, when I use this in the day, I come into my platform in the morning once the market bell goes, and I click on it, and it starts pushing out the names and stuff like that. Right now, of course, there's no volume in the market on the tickers, so there's no screeners on here for this one right here. But we're going to go ahead and build one from scratch. Oh, there we go. Actually, take that back. This one does have some. It just was frozen. But we're going to go ahead and build one from scratch. So important things that I think are most important when you're building a screener. First thing, of course, we're looking at the equity market in the US. And so, you can go into on Webull, they have the Hong Kong and the Chinese mainland. We're not really looking to trade that stuff. Other platforms, TOS, you have, India, you have Japan, you got some other market regions. We're really mainly focused on the US market when we're talking about this type of stuff. And next thing, I want to go ahead and get broad. All right, my market cap. I want to go ahead and get broad because I don't want to limit myself at first. We're going to go ahead and we're going to kind of tailor this down. And as you can see, and right here, this ROE, I'm going to go ahead and take this out. We'll take this ROE out and this MA. So we're starting from scratch. Okay. Only thing we have is market cap. That's the very first thing I want on here. We got to have a market cap because this is what's giving us our tickers. All right. As you can see right here, we have the full spectrum market cap going, and we have almost 7,000 tickers, right? Now, notice we can create watch lists, and this is what we do with our scanners, okay? Once we get down to a limit of stocks that, a handful of stocks that we like, we're going to go ahead and create a watch list. And this watch list is what we're going to use, the next day in the market or during the market day when we're looking for the scanner, because it's our pool of ideas that we're doing. But the market cap, we're going to go ahead and open it up. And now we're going to start looking into our filters. And we got, of course, the region, market cap. And you can use any of these that you want. But the big ones that I want you to focus on is we want things that move and shake. So we want volume. And right here, we want volume that is over 2 million. All right, we want volume that's over 2 million, and we want it as maxed out as possible. So at least 2 million, and we're going to go ahead and max it out. Notice we went from 6,000 all the way down to 791, right? It'll even, when we adjust the market cap, it'll even come even further, right? We go back into the filter, and now we want to kind of look into some financial indicators, seeing if any of these give us an idea. Now, when we're looking for stocks specifically right now, the big one that is really getting people excited is this PPE, okay? This forward PE ratio. Now, typically, you have some of these stocks that their forward PE is just ridiculous, right? But typically, in a normal sense from a financial side of the house, a stock, a forward PE that you're looking for a good stock for potential is somewhere between 15 and 25, right? Now, of course, you got things like NVDA that, could be pushing up like 80s, maybe even 100, Amazon pushing up 80s and stuff. Some of these, magnificent sevens, they're pushing really high forward PEs, and that's because their evaluations are extremely high with this artificial intelligence. Fourth quarter will give us a good understanding of where they actually are at. When those earnings reports come out, that's where the proof meets the pudding, right? That's where, the rubber meets the road. And we'll find out if the evaluations that these artificial intelligent companies are getting with these extreme forward PEs are actually going to come in and hold weight or not. And that's what is got a lot of people right now kind of on shaky ground. So we're going to go ahead and put a forward PE on here, and I'm going to go ahead and put the forward PE at least 15, and we're going to max it out. Notice we went from 700 down to 269. Okay, we like that. We're cool with that. All right. We're going to go ahead and go into another filter, a technical signal. Now notice technical signals, we can do that on our own off of when we actually are looking at the chart. I don't typically use a technical signal with my screener unless I'm looking for something specific, like a candlestick pattern, such as like an inside bar, or like maybe wedge patterns, or some sort of pattern. So I'm gonna go ahead and skip this, but I'm going to show you what it looks like if we were to do a candlestick pattern. Right, we can go in here and we can look at all these different candlestick patterns: engulfing line, exhaustion bar, gravestone, hammer, hangman, inside bar. This is one of my preferred ones I like. Actually, you know what? We're going to go ahead and do the inside bar because I love inside bars. We're going to go ahead and do this one. And I'm a bull at heart. So we're going to go ahead and do a bullish signal on the inside bar. And we want a medium and short-term side of the house. And we're going to go ahead and do that. Notice we went down to 56. Okay, we like that. Yeah, I like that. And notice we can do candlestick patterns. We can also come in here, and I wanted to show you a technical signals. If we're looking at technical signals, we got the Bowler band. We got all these different technical signals, a lot of good information that we can utilize. You just kind of have to play with your platform and what you can do. Now, I will say this: Robinhood is limited on the options. They made it very simple with customizing options that they have now with screeners that they have, but they're limited on the options. So if you are using Robinhood, you are limited on what you can use. They have gotten a lot better than they used to. They've kind of tried to play with the big boys like Webull, Thinkorswim, and TradingView, but they're still not on that level yet. But it's always good to have another platform. I use Robinhood to trade. It's very simple. I like it. It's very easy platform, and it shows up very nice when you're pushing and posting alerts and stuff. But I use Webull as my preferred platform for due
Can I
diligence.
ask you a question? What
Yes.
about the video version, the computer version of Robinhood?
Computer version of Robinhood? Yes, it has a few different features than the phone. If you expand the chart out with that little full chart expanding thing, but it doesn't allow you to do as much as with the actual charts, like actually placing trend lines and stuff like that. It's still very limited with what they're now. Like I said, they're coming along. They're getting there. They're just not there quite yet.
Yeah. Okay.
Yeah, they're trying to make it the whole idea with Robinhood is they want it to be super simple, and easy, which is good. It is good. But once you get a little bit of knowledge underneath your belt and you start to develop, some trading knowledge, you need a little bit more aggressive platform, just so that you have some due diligence, because you're limiting yourself with your knowledge growth just sticking with Robinhood. Robinhood's great.
I have Thinkorswim also, but it's a bit complicated sometimes. It looks.
Thinkorswim is a fantastic platform. In fact, I would argue that Thinkorswim is probably it's like the big boy. It's the grandfather, the granddaddy of the investor world. If you're a pro investor, you're using Thinkorswim. If you do like Thinkorswim, we do have a class that Shiner did about an hour and a half. He broke down Thinkorswim because he's been using it for about 25 years or so.
Oh, wow.
We have that on the website. I can put that in the link here in the chat so that you can check it out.
I would be interested in that because I have that. So that would be great.
Yep, I'll put that link in the chat once we get towards the end, and then you can go look at that on your free time. But he did a real good job on that class, and it was a real good breakdown. Like I said, he's been using Thinkorswim for about 25 years, and he pretty much knows that system inside and out. In fact, when I make him use other systems for for our, like trading groups and that we have, he gets mad at me because he's like, dude, I just want to use Thinkorswim. And I'm like, no, we need to try these other things. He's like, dude, I don't like these other things. I'm like, well, we need to try them out because we got to be well-rounded. He's like,
Yeah.
But when you know something and you like something, you want to
Yeah, I
keep
know. It's hard.
yeah. All right. So we're going to go ahead and keep this candlestick pattern. I like the inside
Okay.
bar. We like that. And let's go ahead and look at analyst ratings. We want stuff with the analyst ratings that give us, we don't want things that, unless we're looking really short, but we want things that are at least a strong buy or a buy, right? And we could even add holds because a lot of things are on holds right now, like even Apple, right? A lot of analysts have Apple as a sell right now or a hold instead of a strong buy because of the iPhone 15 sales. But then you got, 80% of people that are like Apple forever, so, sometimes we'll add the hold, but I think right now we got a pretty decent amount of stocks right here. And then once we start to creep in our market cap, we'll start to lower and lower this. So just to recap, we're going to go ahead and go with what we got. Market cap, so far we're full market cap, volume 2 million and above, forward PE ratio 15 and above. We got a candlestick pattern that we're looking for, inside bar.
Sorry, what do you have for market cap?
Market cap right now, we have a full spectrum. We have the entire market cap. Yep.
Okay.
But we got the volume at 2 million and above, and the volume is average volume on the day. Okay. Average trading volume on the day. Forward PE ratio 15 and above. Inside bar, that's what it's looking for, with a analyst rating of a strong buy or a buy. Now, we're going to start creeping in our market cap. We want to kind of get this number here. We want to get this down to about 15 or so, because 44 is a lot to handle. Right. If we're trying to trade and look for things, we want to kind of get this into the 15 to 10 range, because then that'll give us a good idea of what's moving and shaking on the day. So we're going to go ahead and come into 5 billion first. And see what we got. All right, came to 40. Okay, so we went down a little bit. So we got basically what we have here, this group that we have so far, I call it the big boys. We have the big boys. These guys are the ones that have over 5 billion market cap. So these are the ones that are established companies that are making some money and moving and shaking, right? So we're going to go ahead and come in with 10 billion. All right, 36, okay. And this is just a little thing, 15 billion. See what we get. 31. Come in 25. 20. All right, 26. We're getting closer. Let's go ahead and come into 30 billion. All right, 21. We're getting there. All right, I'm going to go ahead and come in at 45, come in a little aggressive. 16. Okay, I like this right here. 45 billion and up. Volume 2 million and up, forward PE ratio 15 and up, inside bar pattern, and an analyst rating of a strong buy or a buy. And we have 15 stocks. And if you notice, all 15 of these stocks, I bet, are stocks that you pay attention to anyways. Amazon, NVIDIA, Comcast. Maybe you don't pay attention to Comcast, but it's popular with the streaming wars. Cisco, Meta. We always trade Meta. PayPal, my nemesis. Baba, Netflix, of course, is there. CRM, Panwa. So this right here, Adobe, this is a fantastic list for us to go ahead and start looking. So we're going to create a watch list. And what we're doing is we're building something for tomorrow. And what I'll do is I'll post this in the chat thread that we have. This will be a watch list that we're building tomorrow, that we're doing right here live. So I'm going to create this, and we're going to call this for October 23 watch list, big boys.
Do you have to do this every day?
Well, no, once you build the scanner, once we have the scanner, we don't have to do the same scanner every day. We can just run the scanner.
Okay.
But if we wanted the watch list, since we traded the watch list, if we wanted the watch list to change, we'd have to create a new watch list based off the scanner. So we could come into this scanner right here, since we just created this.
Yeah.
I'm going to save this. And this is going to be my 4 October 23 big boy.
So what's the platform you're using?
This is Webull.
Weibo. Okay.
Yep. But you can do this on all the major platforms. TOS has the same features, and it just a little different, just small little differences. But so tomorrow, like when I start looking at the market bell, right? When I'm starting to look for trades pre-market, I'm going to come into my application, I'm going to open up Webull and I'm going to look and I'm going to do my thing. I'm going to come into my screeners and I'm going to look at my screeners. I'm going to click on this. Here's
how about Weibo? Weibo, is that the same?
Webull?
Yeah, Weibo.
Yeah, this is what I'm using right now.
Oh, this is Weibo. Okay.
Yeah. But when I come into the market tomorrow, I'm going to, come into it. I'm going to open up my charts. I'm going to be like, okay, market, where am I going to go attack the market today? I'm going to look at my screener. I created this last night. Good. I'm going to go ahead and click on it. And it's going to give me a fresh list of stocks that are moving and shaking based off of the scan. Now, we created a watch list today for tomorrow. If I wanted to create a fresh watch list on the day, so tomorrow would be 5 October, right? I would have to create a new watch list because this 16 stocks, it might be 20 stocks tomorrow, or it could be 15 stocks. One of these might drop off. Maybe, the volume of the day is less than 2 million, right?
Because of the scanner, yeah.
Yeah, exactly, right? One of them might drop off. It might add in, a couple, but it'll be pretty close within this range. It won't be too much because our filters that we have are pretty tight. And we can loosen the filters as well if we wanted to get a more broad spectrum. Like say when we push the scanner, it only gives us 5 stocks. We're like, oh, okay, well then, what do? Well, we'd come here, we'd go into modify, right? Or edit. And if it only gave us 5, we're like, okay, I still like the inside bar. I still like this. Where's the one thing that I can do? And we're like, okay, we'll just adjust the market cap because that's the big one that gives us the best push on the numbers. So we would just come in and adjust the market cap and it would change the number most likely. And that's how we could get more numbers filtered in if we got a poor result on the scanner on the day.
Okay.
Yep. But that's a good thing. And so then we would go in here and we got it. We got our scanner right here, Amazon. We got our watch list we created. And then, so tomorrow we could go into our watch list and I'd come right here and I would start looking at the charts.
So you created the watch list after you create the scanner, huh?
Yes, absolutely. So, yep. So as soon as I did the scanner, we created the scanner, the screener. As soon as we created it with the parameters we liked, we came over here and we created a watch list with
create a watch
this pool.
Okay.
Yep. So that, and then remember, because I was saying we could get stuck looking at hundreds of stocks, but that can, that would overwhelm our brains. I mean, there's, we need to focus in on things that are moving and shaking. And this is what we like. I love inside bars. They give us a top line and a bottom line. And the volume, we want things that are moving and shaking.
So inside bars, that's for stock that are going up, like,
or down. But the one I picked specifically was bullish, with a bullish tendency. And I'm about to go into that so I can show you when we get into the stock. So the one I picked was the inside bar. And this is how I'm going to look at this tomorrow when I come into my market. I'm going to look at my watch list. I'm going to go to my watch list. I'm going to click on it. I'm going to pull it up. My watch list will be over here. My stocks here. And I have my chart. We're not going to go into chart settings this class because that's a whole class in itself. But I have my normal settings that I use, my EMAs and my sub indicators.
Okay, so this were already set before, your EMAs and all of that.
Yeah, this is my normal set. This is what
Okay, yeah,
this is my setup. This is
yeah,
my bread and butter. What
yeah.
when I hop into the market, this is how my charts look when I
Okay.
first get in.
So
But
at the minimum you do what? The 200 EMA and
I use a 50
15. Yeah.
50 for my long frame MA. I use a 50 MA, and then I use a 10 and a 20 EMA.
Oh, 10, 20, and 15.
Yep. And then I use three. I like three, sometimes four, but mainly I like three sub indicators because I have a saying. I like three reasons why to push the buy, right?
Yeah.
So I like an RSI, I like my MACD, and I like SMI. That's just a personal one. You can use any three that you like that makes sense to you. And like I said, we'll do another class probably next week.
Yeah.
We'll do indicators class, but
Yeah.
it'll be we'll cover sub indicators next week. I think that'd be a good topic. But I just want to kind of go into this one right here, what we got. And
Okay.
anytime we're looking at these, we want to go from a bird's eye view approach. And I like to go ahead and I like to use the 4-hour chart first.
Okay.
4-hour chart. And what the inside bar gave us is it gave us on the day an inside bar. Each of these should have an inside bar, like Amazon got an inside bar to the bull side. This one should have an inside bar, and sometimes it doesn't. Sometimes it'll kind of give you
So the inside bar is the one the what do you call, the one that goes up after the candle, that's like in this case the green candle after after the red one, a
Yeah,
big red candle, right? That the
yeah.
inside.
So an um, inside bar is a good pattern to build trigger points off of, because what it is you have a candlestick that has closed inside of a mother bar over here
Oh, I see.
that engulfs this. That's why they
It
call it the
engulfs.
inside bar,
Yes.
because
Okay.
this is inside of this mother bar over here.
Okay. So it's saying that it's starting to the at the close to the top and ending somewhere there. It's
Yeah.
like it's kind of saying it's going up. It
Well,
starts of a yeah,
yeah, well, this closed green, so this is a bullish close. But
yeah,
the main point is that the
you,
price action, the price
yeah.
action, the daily price action in this candlestick all resided inside of the previous day's price action. And so when we
Oh,
look at
i-
this,
is
when
this
we're
a
looking,
days or a 4 hour? Each one of these.
well, right here, we're on the day chart.
Oh, this is day chart.
Yep.
Okay.
What I'm going to do, we're looking at the day chart first, and then I'm going to put my lines on here. I'm showing you how we use the inside bar real quick off the scanner. So if
Okay.
we were looking at Amazon, Amazon's one of our top hit stocks that we're looking for the push to the upside, right? We're looking
Yeah.
for a bullish push to cover this gap. And so it came up on our inside bar scanner as one of our 16, 17 stocks that we like. We also we like Amazon, and it's one of our hot item stocks that we're looking for to trade tomorrow and this week anyway. So this
So
one's
in this one, how many inside bars do you have? The last one?
we're focused on this one, this
Okay,
last one.
the last one.
I mean, you got multiple inside bars, but we don't care about these.
Yeah,
We
because
care
they're
about this
positive.
one because this inside bar is giving us our triggers, and I'm going to show you what I mean by triggers. So,
Okay.
inside bar scan, right? Giving us idea. We're going to go ahead and put a couple of lines on here. What we do is we go off of the main. I like to go off the meat and potatoes. I call it the meat and potatoes, the full body of the candlestick. Some people like the wicks, the little tippy tips. I don't
Yeah,
care about the tippy tips. I care about the meat and potatoes. I want the full meal,
the
right?
top. Yeah.
Yeah, that's the way I think. I want the full meal. And we're going to go ahead and put our lines there. And I'm going to go ahead and color these lines purple just so I can have an idea. All right. Now I did that. I'm going to pick out of my scanner. I'm going to pick 5 stocks that I like. And I'm going to go ahead and pick Amazon. I like Amazon. I'm going to pick Meta. Meta's given us an inside bar signal as well. Even though it closed higher,
Yeah.
it's giving us
Yeah.
an inside bar on one of the time frames. So we're going to go ahead and build our chart, our triggers off of this real quick.
So that one is also inside bar, even though it's bigger.
Well, it's giving us the inside bar scanner. This would be an inside bar to an outside bar, but I think when you do the scanner,
Yeah.
on the 4-hour chart, it gave us the inside bar.
Oh,
So in
okay.
one of the time frames, when you do the scanner, one of the longer time frames, it gave you the 4-hour signal. So right here, it gave us the 4-hour inside bar, which we're going to go ahead and build off of our thing.
So this inside bar, it will give you on either a 4 or a daily or a different one time frame.
Potentially, when you're doing due diligence the day prior, right? You always want to start off with a bird's eye view approach, which for good measure is the day chart. And you want to look at that first. So if we got the ping over here for the inside bar on the day chart, right? Which means it could have closed regular market hours. It closed with an inside bar. Maybe it moved in pre-market a little bit and moved the average. Who knows? But we go ahead and we look, we're like, okay, that's not an inside bar, is it? No, it's an outside bar. So we go to the next time frame below that, which is the day chart. We're going to go into the next time frame, 4 hours. We're like, okay, here's an inside bar on the 4-hour chart, which gives us a good, remember, 4 hours is a great price action movement as well, right? So we have an inside bar on the 4-hour chart, and we're like, okay, now we can build some triggers. And so we're going to go ahead and build triggers. Now, this one, we would build off the wicks, but we wouldn't go off of this top wick here because that's just one wick. Remember, we want multiple touches. This right here, we're limiting ourselves. If we're going to build our trigger off of this, we want at least 2 touches. Boom. So I'm bringing my trigger down this way. So I at least am supported here and I'm supported here. This is my top line trigger. I don't ever just want to have a single point of failure. If my meat and potatoes is not at the level or not the level of the full candlestick, then I can't put my line there. I got to come up a little bit, and I come up to where I have a multiple touch, and right there I got 1, 2 touches, and then I'll put my bottom trigger on the meat and potatoes right there, and now we got our triggers. And these are the triggers that we're going to look for trades when we come into pre-market tomorrow off of. And then I'm going to pick one more just for simplicity and time's sake. We're going to do NVDA.
So we're setting this up for tomorrow, right?
We are, yes.
And then would that change things tomorrow morning? Like,
oh, it could, yeah, absolutely. And tomorrow in pre-market, it could take off, it could decline, and then we'd have to adjust our lines based off the price action. But it's giving us an idea of the direction. You know what I mean?
Yeah.
Yep. And this one is an inside bar on the day. It's very slightly. It's right there at just barely. This one's a little less closed than this one. So we're going to go ahead and put our line here. And we're going to come right there. Boom, right there. There's our bottom. And then we're going to put our top right there. All right. Now what we have is we have a plan of action. So tomorrow we have 3 stocks that we're looking at based off we have 16 stocks that we have potential, but 3 that are in focus, right?
Yeah.
Amazon, Meta, and NVDA. We already know those stocks. We like to trade those stocks. We know they're movers and shakers, and we just chop them up to where we have triggers. And we tell ourselves, okay, Amazon, if you start closing on a 5-minute or 15-minute chart, remember, we trade off of when we're actually trading on the day, we go into dual charts. So we got our plan of action, right? Now let's pretend we're looking for
a trade. So when tomorrow we did our work on the 1 day and 4-hour charts.
Yep.
So tomorrow we work on what? On the 5-minute chart?
Yes, on the 5-minute and 15-minute chart. That's the
5 and 15.
preferred. Now
5
you
and
don't
15.
you can use whatever feels comfortable to you, but the preferred charts to use specifically with day trading
Okay,
to have time frame continuity would be the 5-minute and 15-minute chart. So we're going to use dual charts. Like we're pretending right now. Let's pretend this is now it's pre-market. Tomorrow's pre-market
Yeah.
right before the bell. We're looking for a trade. We're checking our training out. We go into dual charts. Right. I'm going to go ahead and set this up. I'm going to put this on the 5-minute. I'm going to put this on the 15-minute. And I'm going to bring it out a little bit so I have my lines. Oops. What is that? All right. And notice here's my lines, right? On the 5-minute chart. Okay, there it is. And here's my lines on the 15-minute chart. So we tell ourselves, all right, Amazon, if you pop and you start rising above towards this line and you break this, this is a trigger that would make me consider going long on a trade. If you were to break this down here, and notice this is the way down one, right? This is one that would give me the idea to go ahead and go short on a trade.
Sure.
And these
So
ones,
when you short, do you just buy a put, or do you really?
or you would go, or you doesn't even have to be options. It can also be the stock. You could short the stock as well.
Yeah. Okay. So that you need special permission, right? From the.
You do, yeah, yep. But if you were doing options, yes, it would be an options trade. It would be the calls to the upside or the puts to the downside once you trade.
Yeah,
Now,
I can do calls up and or puts the combine put, but for options, yeah. But I don't have the shorting like for a stock.
yeah.
So maybe that's something useful to add, right? To add.
Yeah. Well, and having experience with it is definitely one of those. It's one of those tools to use in the future, especially if you're truly wanting to become a well-rounded investor. Having the ability to short a stock is very lucrative.
Yeah.
All right. Now we got some space here. So let's pretend this level right here, and I'm going to wrap this up real quick. I'm going to give you this last part, and then we're going to call the training for today. But let's pretend this level right here, this is pre-market, right?
Okay.
And we're wanting to get into Amazon. We like Amazon. We like what we're seeing. We're like, you know what? I have my top, I have my bottom lines. I like what I'm seeing, but this, we got about a $2 push for this to trigger, and we got about a $2 push, even more so, almost $3 push for this to trigger. We might miss some bread on the table because we could be making money like this, right?
Yeah.
And we could have made money on Amazon, riding it here, 127 to 125. That's a $2 push. We could make money, but it didn't trigger. So it's like, what, am I not trading if it doesn't trigger? No. We're going to go ahead and put intra lines inside of our lines. And so what we're doing there is we're going to just come in here based off of price action the previous day, right?
Yeah.
And remember, we don't care about the tip. We don't care about the tip. We want meat and potatoes, right? Meat and potatoes. When you look at this, price action, price action, price action, meat and potatoes. This is our trigger to the upside. If we make a rule, we say, all right, Amazon, you push on a 5-minute chart, 15-minute chart is better, but 5-minute chart, you push above 127.30. I'm going to go long, and I'm expecting it to at least hit 128 and exceed it for a trade. So we're looking to make some money on this trade. That would be the goal, for it to go in this direction towards this area. This would be the area where we would expect to see potential resistance. And if we didn't get the resistance, then we would go to the next level above this. Now we go ahead and make our bottom. If we have the top, we have to have a bottom, and we go ahead and look for price action at the bottom. We're just looking for, a lot of movement. All right. I like this area here. It has, Kitty, get off my computer. I like this movement here. We got a lot of, it came out. We got a lot of price action here, a bunch of touches, a bunch of price action, and we got a little bit of spikes down lower, but we're not, but if we go a little bit lower, we may be getting too loose on our movement and might miss some. Right here is fine because we're not too aggressive here where we could get a sharp reversal, but we're coming down and, you know, we got a lot of price action. So we tell ourselves, all right, Amazon, you trigger to the bottom 126 on a 5-minute or 15-minute chart. I'm going short towards 124.50. And then, of course, our contracts that we choose can be our bigger lines here. We can choose the 128 contract or we can choose the 124 contract because they're not too far out the money as they're in our range that we put. Does that make sense?
Oh, yeah. So, okay, that's good. I was going to ask you that. So the contract that you take would be where it's higher and lower than your trigger or the
Yes, unless you want to go in the money, at the money, depending on your capital roll. Of course, at the money, in the money is best, but a lot of people don't have that type of thing. With options, we don't need it to hit this trigger. We just need it to go in that direction.
And then
Yep, we needed to go in that direction and keep going in that direction with as minimal dips as possible, because every time we do this, as you can see right here, this is what kills premium. People go long, like example, we go long here, you know, Amazon kicks off, we go long and we don't take money here, right? We expect it to have another push to the upside. Well, we get the drop all the way back to our entry point. We lose all this premium plus time decay. And essentially what we need is we need it to hit this and exceed this in order to start making profit again, because we entered here, it pushes up. We're like, ooh, okay, I'm getting greedy. I think it has a little bit more. Oh no, it sells off. And we're like, dang it, I should have sold here. I should have, could have, would have, but I didn't. And we're like, okay, I'm going to hold. It's holding this area. All right, it's going to go back up. Great. Oh, there it goes. It's like it's at the same level. And you're like, hold on, it's at the same level. Why is it not? Why am I not at the same price I was previously? Well, because premium, implied volatility, and time decay has all been jacked. We need to exceed this point in order to get into profit.
Okay.
Does that make sense?
You would, so you would use the support and resistance levels for the option.
Yeah, absolutely. Because, and it's not so much support and resistance level, but you're in range. You want something that's in range of a plausible move. You know, all too often people, you know, when they look, remember right here, where's it closed at? 126, right? Okay. Right. All too often people will get into 126. We're right here, Amazon. Okay. Close on the bell right here. All too often people look at this and they're like, ooh, 120, only $6 per contract. Yes, you know, or hang on, that's puts. Let's go calls, right? All right. They look at this, they're like, oh, 132, only 9 cents per contract or $9 per contract. Yes, awesome. But we're at 126, 132. That's, you know, 132, that's all the way up here. And you know, we have to hit this level first, clear this gap, and then
we'll never get there. It's not maybe,
you know, we're not getting there yet unless Amazon comes out with something like, you know, some crazy news thing. Then of course you get the push, but we can't expect that. You know, we have to hit this level first, then this level, because we got all this price action. We got all this support and resistance that we have to clear first to go on to the next level. So people get spun out on these cheap contracts, but they go too far out the money, and could have made some money had they just stuck with, you know, look, this isn't a bad contract. This 128, this is in range. Look where our lines are at.
And also you have to look at the delta also. for
Yeah,
each dollar, how much it would.
yeah, you look, yeah, your Greeks come into play. Absolutely.
Right.
This 128, look, that's in range.
Yeah.
That's in range of our move that we did on our
Yeah.
chart. And it's not too expensive, $82. Delta right here, we get a $1 push to the upside. We're making 36 bucks on our contract. And
Yeah.
our delta is higher than our theta. And the volume, look at the volume. Volume's high. We like that. As long as the delta is higher than the theta, we like that. And as long as the volume is juiced to where we can slide in and out of our contract, we like that too. What we don't want is we don't want this, right? You know, I'm
Theta
using
is
it
the
as an
time
example.
decay, right?
Yeah, I'm using it as an example. We don't want this because there's only one person in this. We'll never be able to sell.
Oh, what that's Netflix, yeah.
But what I'm saying is
Volume.
there's only one person that has this contract and they're never
Yeah.
selling. There's no
So
money, but
yeah.
they aren't able to sell anyways because there's only one of them. No one's buying
Yeah.
it.
You want to look at the volume all the time, right?
Oh yeah, volume is key. Volume and price action.
Yes.
All right. All right. Well, that's about all I got for the training today. This was the first one we did in October. I hope you got something out of it.
Yes, definitely. Thank you.
Yeah, no problem. I'm going to go ahead and chop this recording up a little bit. I'm going to put it into the stream, and you know, we're going to do these every Wednesday. We're going to do at least 30 minutes to 45 minutes training every Wednesday, you know, for the premium members, because we want to not only, you know, make money with the signals, but we truly want to get that growing, learning, and sharing atmosphere with Traders War Room.
Yeah, that's great. Yeah, thank you very much. Thanks.
All right, no problem. I'll see you on the trading floor tomorrow. Have a good evening.
Okay. So you are who are you now? And then because there's a lot of you. Are you?
Oh, I'm Chuck.
You're Chuck. Oh, you're the CEO, right?
Yep, I own it. Yep.
Okay, great. Awesome.
Yep. Me and Shiner. Shiner's my co-owner. Him and I own TWR, and then we have our staff members. You know, some trusted people: Leroy, T Law, Mick, John, Jay Bass, and a few of the other ones. And then you know, we have our analysts that we have on the team as contractors.
Okay. Yeah. Okay. I just joined this is like my second day, and yeah, I'm starting to follow you, and also Shiner. It looks like he's good.
Yeah, well, I appreciate your support. And if you got any questions, go into those chat rooms and hit us up, man. My people in the chat room, each of those guys love to give advice out, and our members love to help out as well.
Okay, thank you.
All right, no problem. You have a good evening. I'll see you on the trading floor tomorrow.
All right, thanks.
All right, bye.